Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected volatility and trading range for the day. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and to help develop a directional bias as well as for setups. And just to be clear, when I talk about setups, I'm going to be talking about an underlying asset, whether it's the S&P 500 or a stock like Apple or Tesla. I'll be talking about the underlying, and the setups can be taken any number of ways, with shares, with futures, or options. Options, single options or option spreads, up to you. I'm just talking about an analysis based on the options market, and then talking about setups and underlying assets that can be taken, again, any number of ways. And questions and comments are welcome. And I will be watching the Options-Doug chat channel in Discord and also the chat and YouTube for your questions and comments. So please feel free to post your questions and comments. All right, let's get started. What I want to cover today, first of all, go over news, events, economic data, and events for the week. I'll talk about my positional analysis and then talk about some setups. All right, so first of all, economic data for the week. There's a lot of pretty much minor data that came out, that comes out this week. Today, I think there was some housing data at 10 a.m., something at 10 a.m., and then starting tomorrow, the only thing that's marked here with high significance is the building permits tomorrow at 8:30 a.m. Eastern Time. And then for the rest of the week, just minor medium or low impact data. Jobless claims, manufacturing index, PMI data on Friday. And also Friday note is the monthly expiration. So that is the March 21st, April 21st monthly expiration. All right, let's talk about positional analysis now. And I'm going to go look at Bookmap. And this is showing key levels as well as order flow, again in Bookmap for the S&P 500 futures. Normally I show a couple of thinkorswim charts, a larger time frame, but for some reason Spotgamma did not update the thinkorswim script for today, so the levels are out of date on my thinkorswim chart, so I'm not going to show that. And the S&P 500 ES is trading in a narrow range today, as you can see. And let's just zoom a little bit. Here are some levels shown on my chart for the, again, ES, S&P 500. I have two columns of notes here. And the first is the Spotgamma cloud notes provided to Spotgamma subscribers for a variety of platforms. And these appear to be up to date. And this is showing, first of all, key Spotgamma levels at SPX. So this is SPX 4150 and converted to an equivalent ES number. Looks like Spotgamma is using a 27-point difference, and I'm using a 25.25 point difference between ES and SPX. Alright, so in YouTube, Eli asks, is the think script you use something you share? No, it's not. That is something that's provided to Spotgamma subscribers. And they provide these levels, again, for a variety of platforms. And I'm showing the levels in Bookmap. And again, for some reason, the think script was not updated today. It was showing levels from last week, so I did not, I'm not showing that today. And then also here's the volatility trigger, and that is again for SPX. I'm showing it just a little bit lower, so I'm showing my cloud notes here, and here I have the 4150 level. I'm also showing key SPY levels, and there's the SPY 413 volatility trigger. And you can see that that acted as resistance today, this morning, between 9:30 and 10:30. So for the first hour this morning, that acted as resistance. And note, this is also I'm also showing ES numbers, and this is I show the 50s and the zeros for ES, and so that's the ES 4150 level. And Eli asked another question. And Eli asked, does the price lines add-on allow you to set auto-updating formulas? I don't know. I don't think so. I have never looked into that. I'll show you what I do in just a minute. And I don't think the levels change like the ES SPX difference. I don't think it changes enough during the day to make a difference. And I really don't want to see those levels jumping around. I want something stable. So I change that every day. And I have, thanks to another think script that I will share in Discord, a member in Discord shared a think script, and I modified it, made a couple of others that calculate both the ES SPX difference and the ratio of SPX to SPY and the ratio of ES to SPY. And I'll show that in just a minute. So here is the, again, back to the ES futures, S&P 500 futures. This is, as Eli asked, this is I'm using the price lines add-on here for these. So I fill out these numbers in a spreadsheet, my own spreadsheet this morning, and those levels then are shown in this column, and it also draws the lines. And I like the lines. It makes it very easy to see as you're trading. these levels again, the SPY volatility trigger at 413 acting as resistance, and the ES 4150 acting as support. And I'll talk more about setups in a few minutes. All right, while I'm mentioning that think script, let's just take a look at that. And I have these on this is a thinkorswim chart, and this is showing SPY, and the scripts that I have are shown in these badges here. So here is and I will share these in Discord. All right, so first of all, here is the ES minus SPX. And right now it appears to be varying between 25 and 25.5. So I just took 25.25. Looks like it's spending more time at 25. And then here is the ES SPY ratio at about 10.0904 is what I use today, and that has not changed much. So I think an auto update, I'm not sure would be that helpful. I set these levels, ES minus SPX. I start using the prior day. This ES divided by SPY, that's shown when SPY starts trading, and then here is SPX divided by SPY. That's the SPX SPY ratio, and I use that for showing the SPX levels on my SPY chart. And then this ES SPY ratio, I use that for showing the SPY levels on my ES chart. So let's go back. So this is I calculate the rate, or I get the ratio from that think script for the SPY levels, and I just use that number and calculate the difference or the ratio, and I use that number in my spreadsheet. All right, so that is the S&P 500, the levels that are in play, very narrow range today. Let's talk about shifts in levels now, and there were a few. For SPX, the volatility trigger shifted higher from 40.95 last Friday to 41.10 today, and also the SPX put wall shifted higher from 3,800 to 3,900. And then for SPY, the volatility trigger shifted higher from 411 to 413. And then for QQQ, the volatility trigger shifted higher from 316 to 318, and the put wall also shifted higher from 300 to 315. All right, let's take a look at gamma levels now, the absolute gamma levels, and we'll see where those levels come from. Let's go. All right, so these are the levels. This is SPX. We'll start there. This is showing the absolute gamma levels, and this will all right, Batch, I'm not sure I understand your question. I haven't talked about any setups yet, or I haven't talked about hero. So I'm not sure I understand your question. You may be jumping ahead. All right, so here's the gamma levels, and maybe you could clarify. Maybe you're. I'm not sure I understand your question in this context. So anyway, here's the SPX, the absolute gamma levels, and this is showing positive gamma or call gamma above in the orange lines. This is market maker's position, and negative gamma or put gamma with the blue bars. All right, so here is the 4,000 level. That is the absolute gamma strike, the strike with the largest absolute gamma. And that can act as support, resistance, or a magnet for price. And here's the 3,900 put wall. That's the strike with the largest net negative gamma. And that is expected to act as support. And then here's the 4,200 call wall, the strike with the largest net positive gamma. And that can be expected to act as resistance. And again, for SPX, the volatility trigger is at 4110, and that is Spotgamma's proprietary gamma flip level. Below that level, market maker's position on the gamma curve is negative, and that means they have to trade with price to hedge their delta exposure, and that tends to increase volatility. That's typical of a negative gamma environment. And above that level, market maker's position on the gamma curve is positive, and they have to trade against price to hedge their delta exposure. And that tends to reduce volatility in a positive gamma environment. So that is SPX. Those are the key daily levels that I track. Let's take a look at SPY now. Going to zoom in on this chart. And again, positive gamma shown above with the orange bars. Positive gamma are called gamma. And blue bars are showing negative gamma or put gamma. And here's the 410. Here's the 410 key gamma strike or absolute gamma strike for SPY, the strike with the largest absolute gamma. And here is the 400 put wall, strike with the largest net negative gamma, can be expected to act as support. And then the call wall at 415, strike with the largest net positive gamma. And there's the 413 volatility trigger for SPY. So Eli asked, you're logged into Discord, where you can find the chat room. The chat room, go to, so it's in Bookmap, and look for weekly live webinars, and then the Options-Doug chat channel. And then I'm also streaming in Discord in the Options with Doug channel, and I will post the think scripts after this webinar today. I have not posted those yet, so I'll post those later. And those are the ones that calculate the ES SPX difference and the ES SPY ratio and the SPX SPY ratio. All right, so those are the levels for SPY. And normally I have to do a refresh before looking at QQQ. And for the NASDAQ, I just look at QQQ. And here is the 315 put wall, support level. The 320 is the call wall and the key gamma strike or absolute gamma strike. So those are the levels that are in play for QQQ. All right, let's take a look at one other chart here. Oh, just to point out again, Friday is expiration. And note, this is delta notional. Note that the orange dominates. The orange is larger than the blue, delta notional. So this is a call dominated expiration. All right, here's the Vanna model. This is for SPX. This chart is showing two curves. The first, this light gray, shows how market makers delta notional changes with changes in price. And that's all the light gray curve is showing. And Gabe says, hey Doug, seems like the Discord link is invalid. I'm not sure exactly what you're referring to. If you don't belong to Discord yet, if you have not signed up, and it's free for everyone, whether you're a Bookmap subscriber or not, there should be a link on the Bookmap website. And if you're having trouble with that, just contact Bookmap support at bookmap.com. All right, so this is the Vanna model for SPX, and this light gray curve is showing how market makers delta notional changes with changes in price, and that's all the light gray curve is showing. And what this is showing is as price increases, market makers delta notional increases, and they have to sell futures to hedge their delta exposure. And that is typical in a positive gamma environment. And then this kind of pink purple curve is adding implied volatility to that. So that is showing how market makers delta notional changes with changes in price and implied volatility. And that's the Vanna effect. And that is the Vanna is the change in delta with a change in implied volatility. So what this is showing is as price increases, there's not much of a Vanna tailwind. This pink curve is really not a lot different on the upside here than the delta only, the light gray curve. And then on the other hand, as price falls, as price decreases, and implied volatility increases, then this is showing that market makers delta notional will increase, and they'll have to sell futures to hedge their delta exposure as price drops. And that's typical in a negative gamma environment. All right, that's for SPX. Let's just take a quick look at SPY. And we're just looking at this curve right here, pretty similar. And then also QQQ. All right, Gabe, thanks for the kind words. Glad you're enjoying it. All right, so that's the Vanna model. Now let's take a quick look at some data here. And just to point out, gamma notional. This is market makers' position on the gamma curve for SPX, SPY, NDX, and QQQ. All these numbers are positive. Again, market makers' position on the gamma curve is positive. That means that traders are short calls for an index. Market makers are long calls, hence the positive gamma position, and they have to sell futures as price rises to hedge their delta exposure, and then when price drops they can buy back those futures, and that again tends to subdue volatility in a positive gamma environment. So given that, my thesis for the day and my plan for the day was definitely looking for a trading range today, not a trend day, but a range day. All right, let's take a look at some setups now, and I want to talk about the S&P 500 first. I'm just going to point out, so this is the S&P 500. It's a combined signal for SPX, SPY, XSP, which is not significant, and also now new starting last week, ES futures. Okay, so this is a combined signal for all these instruments, and I typically look at this signal or SPX so SPX seems to either, again, SPX or the total combined signal seems to be providing the best, most tradable signal. So that's SPX. That's one component of this S&P 500 combined signal. And let's take a look at SPY. And I have not gotten that much out of the SPY signal recently. It seems to be that SPX is having a stronger influence on price action and order flow. And then we can also look at just the future signal here. And that's the signal. And that's definitely bearish today. So there are a number of ways to slice and dice this, and then for each signal we can look at total expirations or just zero DTE, and we can also look at puts and calls separately. So let's go to the SPX signal here, and I'm going to first of all zoom in on the morning session. And this provided a couple of great short divergent setups. And the first was at 10 a.m. Notice price rises, hero levels off, then starts to fall, and price moves up, setting up the first short here. And it turns out this was at SPY, the SPY 413 volatility trigger. And here's the second short. Oops, wrong tool. The second short setup. Hero starts to fall, and then it took a while. But again, that 413 level in play. So let's go take a look at Bookmap now. So those setups were around 10 a.m. and 10:30. I'm going to zoom in. So here are the short setups. The resistance at the 413 volatility trigger. Good short setups every time, with hero being a leading indicator. Traders are taking negative delta positions in total net. Market makers were selling futures. And batch, I still don't understand your question. All of that what? Right, so batch, I'm sorry, I don't understand your question. I'm just taking a, I guess a pretty simple approach here and looking at what, well, let me back up and talk about how I approach this. So I'm looking at Hero here. I see this divergence. Traders taking net negative delta positions in the S&P 500. And then I'm looking for a potential reversal level. And there it was at the 413 volatility trigger. I already know that it acted as resistance once. Then Hero starts dropping. There's the second resistance. And then Hero drops again. Traders taking negative delta positions as price approaches that resistance level for the third time. Let's go take a look at Bookmap now. Zoom out. And let's take a look at one other setup somewhere between 11 and 11:30. Now normally when I'm trading, I have two screens. So I'm looking at Hero on one screen and Hero on one screen and Bookmap on another screen. And this setup at 11:30 was not as apparent. It was more of a confirmation. Let's go back and take a look at Bookmap. And note I'm also reading order flow here. And let's just cover that. So here, especially at this last setup at 10:30, note the shift in order flow here. Green dots, market buy orders on the way up. Those are volume dots showing buy minus sell. And green indicates that there are more buyers than sellers. And note the shift in order flow as price reaches that 413 level. Aggressive sellers start to come in. You can see the shifts in dots from green to pink, and the pink is the color that I use for aggressive sell orders. All right, looks like Truman is trying to answer Batch's question. Okay, so, and you can see the same shift in order flow. Here, just before 11:30. Reversal at just below VWAP. Let me bump up the liquidity here. You can see these limit sell orders here. Liquidity coming in, trying to get filled just below the 4140 resistance level. That's SPX 4150. And price reverses lower. pink dots come in, and the price target down at the 4150 level, ES 4150. So those were the short setups in the S&P 500 this morning. All right, Eli asked, do you use default settings for CVD, stops, and iceberg trackers below? I'll tell you what I use. For CVD, yeah, I use the default. Oh, that is... I've got a number of different CVDs. I'm not sure why it's showing this one here. For the standard CVD, let's see, I'm not sure. Oh, here we go. There's CVD. So this is what I'm using. I really don't use this. I have this shown for showing different sizes. I did that some time ago. But the only thing that I've changed is the color. So I like brighter colors here, so that's what I'm using for positive and negative. And note the line will shift from positive to negative, from blue to this pink color. And then for the subchart indicators for stops and icebergs, I am using the sum mode, and that's really the only change. I've changed the colors, but I'm using sum for both icebergs and stops. Stops in yellow and sums in blue. All right, Eli, I hope that answers your question. One other thing that I've started to look at is I normally have in the past this is NQ, NASDAQ futures, and I have been tracking for everything, all the instruments in my Bookmap chart here. I've been tracking the weekly expected move. There's the lower edge of the weekly expected move shown with the purple line, and there's the upper edge of the expected move. And now I have started tracking or adding these blue lines, which are the daily expected move. Here's the lower edge of the daily expected move for NQ, and these are all based on the options market. And this level, for NQ, has worked very well recently. So if you want an expected range for NQ especially, that's something to keep track of. So there's the lower edge of the daily expected move. And that is for NQ, and I've got it on the same levels on my ES chart here. Yeah, RJ, that is yeah, that I'll show you where I'm getting that. So at the close today at 5 p.m. when futures stop trading for an hour, then I'll just take this number. So the end of the day, I don't know why I wish that little end of the day, I'll look at this number right here, and that's for tomorrow. That is right now the 1 DTE. Look at that number right there, and you can look at that in any options chain, and that's a plus or minus, and then I'll just note that number and I'll update my spreadsheet. And Eli asked, do we take this Spotgamma reference price posted in the Spotgamma AM Founders Note to calculate expected move ranges? And yeah, you can. What he's talking about, and let's go to and Spotgamma used to provide more information on this, and this is so you can use this to calculate that expected move as well, although it's only shown for SPX and SPY. I've just been using it's just a little bit easier to get that information from Thinkorswim or I'm sure any other trading platform with an options chain should show that. All right, let's take a look at some other setups. So that is the S&P 500. I'm going to look at some stocks. Here's AMD. And I'm going to zoom in on the morning session and noted this divergent short setup. So Hero's falling as price makes a higher high. Let's go take a look at Bookmap. Go to AMD. And here's the short setup. At VWAP, note the shift in order flow, the shift in all the green dots to now pink dots coming in, market sell orders. Reversal at VWAP and the 90 put wall key gamma strike. Price targets at 89. And the price moves lower down at the 88 level. And those are high liquidity targets. Price is attracted to the liquidity. Well, Truman says the expected move for the toss option chain is the expected move by expiration. And if there are daily options like ES, NQ, SPX, SPY, and QQQ, then it is daily. So if I'm looking at 1 DTE today, that will be for tomorrow. And if I'm looking at 0 DTE, that is for today. So to set the levels for tomorrow at the end of the day, I will look at the 1 DTE, note those in my spreadsheet or just write those down, and those will be the levels for tomorrow that I've been using. All right, so that's AMD. Here's Amazon. And there are a number of ways that you can do those. Expected rating, trading range, at looking at selling premium, if price is trading inside those ranges, looking at selling an iron condor, for example, or if price reaches one of the daily extremes, selling a vertical, or any way that you want to approach that. So there is Amazon. Let's take a look at Hero for Amazon. And this was another divergent short. Options traders taking negative delta positions. Price makes a higher high, then reverses lower. A couple of short setups there. Oh, just after 10 and around, but before 10:30. All right, let's take a look at Bookmap. And Batch asked, there's a big wall at 101 on Amazon. By wall, if you mean Spotgamma level, no. There is liquidity at 101. And that's shown with the heat map here in Bookmap. Those are resting buy orders. And buyers seek sellers and sellers seek buyers. And this liquidity tends to attract price, acts as a magnet for price. And that's what's so nice about trading stocks, is this liquidity comes in often at the RTH open and stays there for the remainder of the day until it gets filled. If they don't get filled, they'll come in the next day. All right, and RJ asked, do you have any thoughts on tracking IV versus realized volatility? And let me show you what I do. So let's go back to Thinkorswim. Let's take a look at SPX. Take a look at a chart. And I'm going to take a look at this volatility chart. And I have a number of volatility settings. I'm going to zoom in on this. And I haven't updated these yet. That's the weekly expected move. This is what I have been using, and I've had this for years. This is showing IV compared to historical volatility or realized volatility. And as long as the red line is above the blue line, that means that fear is overstated, that implied volatility is higher than realized volatility, so it's a good time for selling premium, and that's what I use that for. So let's zoom back out. So anytime, let's say right in this range here, with pretty steady price, implied volatility much higher, the red line much higher than the blue line, good time for selling volatility. And RJ asked, what's the formula on realized? I have used this script for years. I don't know. I'd have to go take a look at it. All right, and just to point out this, a couple of ways of approaching this range day. First of all, here's an iron condor, and that's 0 DTE options. Here's a vertical. I'm going to keep an eye on these. All right, so that is Amazon. Let's take a look at Meta. Go back and take a look at Hero. And Meta was more of a confirmation short. Right here about 1020. Let's go back and take a look at Bookmap. Notice price reached that high. Traders started taking negative delta positions. And there's the reversal at the 220 key gamma strike. As traders were taking negative delta positions. Let's take a look at Microsoft. And Microsoft, I thought Hero was actually a little bit of a lagging indicator here. But after the break of the 290 key gamma strike, then it was a little bit more clear. As Hero leveled off, let's zoom in on this warning. So price moved up. Hero options traders lagging a little bit as price reached a high. Hero started to move lower and price dropped pretty quickly below that 290 key gamma strike. Not as clear a setup as some other stocks and also futures. So that's Microsoft. And Eli asks, when do you update your Priceline spreadsheet for the trading day? I update it before the RTH open. So on the levels, so first of all, I'm getting for stocks. Let's take a look. I'm getting my levels here from Equity Hub for stocks. So the put wall, call wall, key gamma strike, hedge wall for stocks, those are all updated in the morning, and I can update that spreadsheet, and that's it. I'm done for the day for stocks. And then for the S&P 500 and QQQ, here's SPY, for example. Spotgamma has these pop-ups, and this is showing the key daily levels, like put wall, volatility trigger, call wall, and then the key gamma strike is shown in Equity Hub here. So those are the key daily levels. Then it's also showing some additional levels, and I add those all to my spreadsheet. And then I also have in my spreadsheet we go to my stock spreadsheet. Here's SPY, and then I also have the SPX levels shown right in here, and I will, that ratio, the SPX SPY ratio, does not change that much from day to day. So I start with the number, wrong tool. I start with the number that I had yesterday. if any of these levels change, and it's pretty close. So that's my SPRY setup, the same for QQQ. And then for futures, I have just the same SPX levels. Then I'm also showing the key SPY levels, and all of this I can update before the open, and then I just check the ratios and the SPX ES difference, and if I have to make any changes, it will be minor from day to day. So I can do this all before the market opens, and then make minor changes based on any changes in the ES SPX difference or price ratios after the open. All right, let's take a look at QQQ. And first thing in the morning, there was a nice divergent short just in the first 30 minutes. Notice Hero dropping immediately from the open, traders taking negative delta positions at the open, and that set up a nice short. Just a few minutes after the open, let's go take a look at QQQ and Bookmap. And there's the short setup at this 319 C1 level, and that is a combo 1 level, 1 being the most important in a scale of 1 to 5. So a quick run up to that level, and then a short, another opportunity to short there. Let's take a look at Tesla. Let's take a look at SPY. And I have the same levels on SPY, my SPY chart, as I do on the ES chart. So there's the SPY 413 volatility trigger. Resistance level. There's the SPX 4150, noted as resistance level in the Spotgamma AM Founders Note. So definitely not a lot of range today. It's sort of a range day with a bearish bias. So those are the levels that so the levels on my SPY chart. So I can trade SPY or ES, just looking at the chart here. And then let's wrap it up. Let's take a look at Tesla. And as usual, the stocks that I trade, Tesla and Nvidia, are the most volatile, have the most range. Let's take a look at Hero. Go to Tesla. And as usual with Tesla, there's a very strong correlation between options trades, hedging flow, and price action. And this is separating puts and calls. The orange line is showing call transactions, and the blue line is showing put transactions. And what this is showing is pretty much from the open, a couple of minutes, 10 minutes after the open, traders started buying puts. Initially, they were buying calls, rising orange line. They started selling calls, and price moved lower, setting up the short right here, note the buy sweep, all these small green dots that buy sweep up to the 189 level, and then price reverses lower. Let me just zoom in on this section right here. And note the shift in order flow. Big pink dot comes in, more pink dots, and order flow finally shifts bearish. That's right, RJ. Traders were definitely buying puts, looking for lower prices in Tesla. Let's take one final look at Hero. Look at the total numbers here. This notional value, 47.5 million, positive 47.7 million versus minus 68.1 million for puts. So net put buyers are winning. All right, so Eli asks, orange line up, traders buying calls, dealers short calls. Yes, that is what that means. So the lines are shown in terms of delta. So a rising orange line means that traders are buying calls. Market makers they sell the calls, taking the other side of the trade, and they have to buy stock to hedge their delta exposure. All right, so Truman asks, can you stay in Tesla by what Hero shows as long there's not a divergence? I really don't see much of a divergence typically with Tesla. Tesla, you're looking at more of a confirmation. The Hero line shown in purple tracks the price line pretty closely. And Tommy asks, are those charts in real time? Yes. So this is Hero, HIRO, Hedging Impact Real-Time Options. And Eli asks, blue line down, traders are buying puts, dealers are selling puts. And yes, that is correct. So think of these lines always in terms of delta. So a positive trade would be traders are buying calls and or selling puts, that's positive delta, and negative delta is selling calls and buying puts. And again, market makers are taking the other side of those trades. Let's just go back and take a look at the S&P 500 one more time. And RJ, let me take a look at your question after the webinar. I need to wrap it up, so I'll take a look at your question and see if I can answer that. And Truman says your class always goes by fast. I think that's a good thing. Well, I guess so. If it's interesting. All right, I'm going to wrap it up. My time is up. And I want to thank you for watching. Thanks for your questions and comments. And I will see you tomorrow. Thanks again. Bye.